I have had it with Amazon. Hey, everybody, you're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. Let's talk about what Amazon is doing. And I'm not happy about it, but let's talk about it. And a lot of people are complaining about this. Did they raise their price? No. They've raised their price in the last year, though, for this Amazon Prime. So now, with Amazon Prime, well, not now, it's been a while. It's been like this for a while. You get Amazon Video, and you get a few other benefits of being an Amazon Prime member, including free shipping. Free shipping, 2-day shipping, and in some cases, same-day shipping, which is pretty amazing. You order something, you order it early in the morning. Sometimes you get it the same day. If you have a warehouse nearby, and I'm in San Diego, so we have them, all around. So will I cancel Amazon because of this? Probably not, and I'll explain why and why businesses can do this, why they can raise prices and take away features and still maintain profits and not have a bunch of customers leave because they offer services that you really can't get in many places, right? So let's get into it here. And don't worry, because we're going to tie this in with the broader economy here later in this video. This is not just about what's happening with Amazon. It's going to be about a lot more, a lot of big picture stuff here we'll be talking about towards the middle or end of this video, more towards the middle of this video. First of all, let's talk about what exactly happened here most recently with Amazon. Amazon faces backlash from users over upcoming change to Prime service, and this is known as Prime Video, which I think is pretty cool. I do watch some shows on there, some videos. They even have Thursday Night Football, which I still like to watch from time to time. And what they're doing now is adding in commercials. So even though you're paying this pretty hefty fee for this Amazon Prime membership, and you get these benefits, they're taking away some of the benefits. They're now making it to where you have to watch commercials instead of a commercial-free experiencing. So what they're doing is they're offering, I think, $2.99. You could pay $2.99 extra a month to not watch the commercials, kind of like YouTube Red, where you don't have to watch the commercials. Well, basically, you're getting less now and still paying the same amount for Amazon Prime and everything else that it's included in it. Now, the question would be, does Amazon need the money? Well, I'll let you decide. Here's a look at the quarterly financials going back to December 2022. Revenue, $149 billion, giving a net income of $278 million. March 2023 quarter revenue $127 billion for a net income $3.17 billion. June 2023 revenue $134 billion for net income $6.75 billion. Revenue $143 billion. After expenses, they ended up with a net income of $9.88 billion. So they are raking in the money, and not only that, the numbers are getting bigger, and they're making more and more profits. So if you're an investor in Amazon, this could be good news to you, because these price hikes, not necessarily price hikes, but the option to pay an extra nearly $3 a month to not see ads could add to their bottom line. So some people look at this as a bad thing. Some people look at it as a good thing. Again, if you're invested in Amazon, maybe this will be another big money maker for Amazon, and maybe that'll help the stock go up even more. The stock's already been exploding. I believe it's up about 80% in 2023, somewhere around there. So it's been pretty amazing. But as a consumer, will you be keeping Amazon Prime, or is this the end? Is this the bottom line, or is this the last straw? What's the word? Is this the final straw? Is that how you say it? Anyways, let me know what you think down below. Will you be keeping your Amazon Prime membership if you're an Amazon Prime member? Now, there used to be this trend of people cutting cable TV because the cost of cable was astronomical, and they kept raising the prices. But now, streaming is approaching as much as it is for cable if you have several different channels. Let's take a look at a graphic on this here. And I'm not sure what TV show this is. I don't watch a lot of TV. But there was a show, I guess, with the motorcycle repair people, Chop Shop, I don't know what it was. You were supposed to be cheaper than cable. Right, this guy's very angry. HBO Max, $14.99. Netflix, $12.99. Hulu, $11.99. Showtime, $10.99. And I'm not sure how updated these are, but if you just have these, let's see here. 8 services, you're looking at $90, right? It used to be that $100-something cable bill was something that people got tired of and got appalled at. Now all you have to do is have a few streaming services and you're paying nearly $100, so it's almost not worth it anymore. So they're calling this the great streaming exit. And they are saying this is known as Streamflation. Streamflation. Let's go ahead and look at another graphic here on this. This is the number of customer cancellations at major streaming services as a share of the prior month's total subscription count. And we see it's been going up very rapidly here into late 2023. And of course, we'll see the early 2024 numbers very soon on this. But definitely a big increase. And this is part of the discretionary spending topic that we talk about here quite often, about how people are having to cut out things that they might want, but have to prioritize things they might want for things that they need. Like many people, you have to put gas in the car. You don't have to watch movies on Hulu or Amazon Prime. Those things should be optional. Therefore, things you cut out of your budget should be things you can live without. Food, most people have to buy food. Really hard to cut that out. You can cut down on food, especially in the United States. We have a big obesity problem. Probably the worst country for obesity as far as I see. So a lot of people can cut things out, but do they choose to cut things out? That is the question. Could I live without Amazon Prime? Probably, but I'll give you an example. I just had people complain recently about my video quality, and hopefully it's looking better today. I got another new camera, and it turns out my old camera had some settings that were very difficult to set. I read some reviews on it, and it turns out I wasn't the only one. So hopefully my video quality today will be a little bit better than previous videos. Please give me a comment down in comments. Please note and let me know how the quality is today. Hopefully good. But just an example, I ordered it yesterday, got it this morning through Amazon. So it's very handy, especially if you're doing something, a business, and you just have to have something by a certain date, or you want it as quickly as possible. Imagine getting your car fixed and you have to wait 2 weeks for a part when they can order it and get it there the same day. It's going to be better for customers. It's going to be better for business in general. So sometimes the higher cost is worth it, and there's not too many other options out there similar to Amazon that can compete with Amazon. So Amazon, with these price hikes and making people pay extra to not watch commercials, that's what they can do because they have the leverage. And again, if you're invested in Amazon, it may be a big plus and may be a big moneymaker for your stock. Now back to this chart here, and we have to talk again about the position right now that most consumers are in. And why are more people canceling streaming services? Well, prices are going up, and you need to decide what you need and what you want, right? So what you need, you don't need streaming services, right? You can live without those unless you're going through some sort of addiction or withdrawal and you are addicted to streaming, something like that. But most of the time, people can get away without streaming and still survive, still stay alive. People put up with a lot of nonsense when it's the only game in town, so to speak. All right, but let's tie this in here with the broader economy. So the consumer is in very difficult position. Between 60 and 70% of people admittedly live paycheck to paycheck. I think it's closer to 70, depending on the survey that you look at. People are going to have to make more difficult, more tough decisions here going into 2024. And they're going to have to cut out other unnecessary expenses. Otherwise, it's not going to look pretty. We look at the savings rate, and it's nearly the lowest it's been in 40 years. So we're going to see how this plays out, and we see a lot of uncertainties right now in the global economy. There's talks about rate cuts, and one economist put it as recently here, Doug Casey. He's out there saying, quote, "I hate to sound pessimistic, but you have to call them as you see them. There are storm clouds on the horizon. I'm tempted to say that perfect storm, but the phrase has become hackneyed." I'm not sure if I'm saying that right. It understates the case. Instead, let me say it will be even worse than I think it even could be. The question is, what's the timing on this? That's the end of his quote, by the way. This is me talking. The question is, what is the timing? Will we see a collapse? Could happen at any point. be ready. Be ready for a blackout. Be ready for a black swan event that brings down the markets, that brings down the economy, that shuts everything down. Hedge yourself against inflation by having some investments that will go up with inflation. My favorite's precious metals. It's a lot less volatile than a lot of the stock market is. And I wouldn't be going too heavy into the stock market at this point unless we see a big pullback. Then I'll be going more heavily into the stock market. What I am going heavy in right now is precious metals, especially silver. And but also at the same time, you want to have cash available for a deflationary event in case you get some massive buying opportunities, but also have hedge against inflation, because if they throw QE to infinity at this, helicopter money, drop interest rates, emergency rate cuts, then you could see inflation take off, and then investments could take off with it as well. So instead of seeing a deflationary event, they could actually inflate this thing, and maybe it'll be deflation followed by a bout of QE to infinity, just like we saw in 2020, that takes markets to all-time highs after a correction, right? So some of these things happen in succession, so you have to be ready for both directions. Let's take a look at the US dollar index here. We're down to 102.41. We're looking at a 3-month chart here. So just in 3 months, it's down from a peak. What did it peak out at here? Just under 107, down to 102. And we see de-dollarization continuing across the globe. More nations jumping into the BRICS nations in the anti-dollar crusade. So that could also be another inflationary force. Either way, make sure you're ready for both directions. What do you think about the Amazon Prime price hikes? What do you think about the streaming? What do they call it? The streaming apocalypse. Let me bring it up here, actually. Streamflation and the big uptick in cancellations of the streaming. All right, everybody, thanks for watching. Please like, subscribe to help get this video out there and support this channel. We'll see you here very soon. Keep stacking, everybody. Bye for now. Peace.